I'm Celine Williams, and welcome to the Leading Through Crisis podcast, a conversation series exploring resiliency and leadership in challenging times. So, for many of you, my guest today is a familiar face because she has been on the show before. This is my lovely friend, Jackie Porter, who I believe was on about 2 years ago now. And for those who do not remember Jackie or are new to the show, Jackie is an award-winning financial planner, best-selling author and speaker, and the founder of Team Jackie Porter. And as I mentioned, most importantly, my friend. It's nice to see you again, Jackie.
It's a pleasure to be back, by the way.
Well, thank you. I'm very excited to have you back. Not only because I very selfishly always enjoy speaking with you, but things have changed dramatically in the last 2 years since you were on the program. And I think you sharing your perspective on things now is superbly valuable to folks. So I'm excited to have you back. Thank you for agreeing to come back on the show.
Well, I'm happy to be here. And yes, here we are, we're back, and it's no longer 2020, it's 2022, but it feels like 2020.
Yep,
A little
absolutely.
bit of a deja vu, right?
Yeah, for sure. Oh my goodness. So I know I asked this last time because I ask everyone, but I'm going to start with it because things have changed. So, when you hear Leading Through Crisis, the kind of statement, the name of the show, what comes up for you? What does that bring to mind?
Crisis, I think, is what brings it to mind is really for me, it's being keenly observant because crisis is something that you never expect, but is often around the corner when you least expect it, right? So for me, it means being observant, like looking at what's happening and just taking in information. And I think when you do that, it means you're kind of not necessarily reacting, but just trying to understand. So what's happening right now? Let me try to put my emotions away as much as I can, even though my gut says I need to react to this. No, you need to observe what's happening, try to seek to understand. This is actually the time where you want to take logic rather than take emotion, right? So what's happening, write down what's happening, seek to understand, ask questions, ask for collaboration, talk to different people, get their perspective, and then try to get as much information to get clear on the things you really want to know. So I think being a student, this is a great time to be a student. Approach it the way you would a scientist or a student. How much can I find out about what's happening around me to make me much more clear in what's going on and what I can do about it?
Mm,
So
I love that.
scientist or student. That's the way you want to go. Instead of react, respond, and respond by asking questions and being that scientist or
hmm Um, I love that for a lot of reasons. You know, Partly because my bias is definitely towards the scientific approach and things, be okay with failure, ask the questions, gather information and data, don't get stuck in the my initial reaction is the only reaction. I can't change a decision. I've made a decision. I can't, which I think is not doing those things is really part of the scientific method, the scientific method. But also because I think the past few years and the current state of the world, you and I were talking about it a little bit before we started recording, has people reacting without really any forethought or perspective or lens on the bigger picture,
That's right.
which it doesn't serve them long term. I don't think. Someone might
No,
disagree,
no,
but
no, you're 100% right. The thing about personalizing what's happening. So when you're actually a scientist or student, you're as you said, you're going broad. You're trying to get the big picture. You're gathering data. You're gathering consensus. So what does one person think? What does the other? What do you think after getting all this information and keenly observing what's happening and looking at that information? What does that information reveal? Which is that keen observant piece. Whereas if you personalize things, you're like, oh my gosh, it's happening to me, and it, you know, actually personalizing it and making it about you might lead you to actually rely on the wrong data, right?
Mm.
So it might be that you think, well, you know, the market's down and this happened to my grandmother, and I remember her telling me about it. Those were a completely different set of circumstances around different historic issues that might have absolutely no bearing on what's going on now. What does your grandmother's situation in the markets have to do with what's going on right now with you in the markets? There might be similarities, but there's chances are a lot of differences. Gather that information rather than making it about you. Learn as much as you can so that you can actually have that perspective that you're talking about.
Um,
Knowledge is really
I
powerful.
yeah. And knowledge that you gain from more than just listening to your grandmother. No offense, grandmothers out there, but that's not just listening to your grandmother's story and taking that as the gold standard of truth.
Yeah, we tend to go to that place. So when we're in that reactive mode, we tend to remember that one story or that gut feeling or the way we felt when something else bad happened, and we tend to make it about that. So imagine if you're making a decision, potentially a decision right now about something that happened once to somebody else, not even to you, but to someone else, and you don't even have all the facts. And then you're going to make a life changing decision about that one. That normally would be a data point. That's not even data. That's one data point if you're being a scientist or a student.
Yeah. So I'm curious let's just get into this because again, we were speaking about this before we started, but the state of the economy globally in Canada, in the US, North America, whatever we want to put whatever global lens on it at this point, because everyone's been affected in some way, shape, or form, it seems right now. Um, I think we're seeing a lot of people doing exactly that, whether it's investment choices wherever they're investing, whether it is what they're buying or not buying, whether it is career choices, entrepreneurial, like people are making decisions, or at least my observation is people are making decisions based on one data point or two stories from, the one that always comes to mind is like the, pro crypto or not, there's a lot of stories in the crypto world where someone goes, I'm investing all of my money into crypto because that one guy made $50 million, right?
Ouch.
And then things drop, and now they're pulling out all their money, having lost tons of money because that one person lost all the money. So
Yeah,
it's
yeah, yeah. And that's exactly. And chances are, if you definitely don't want to make life changing decisions in a place of emotion, often it'll lead us to make the wrong decision. So, cool off, gather your head, and then revisit the decision you're making, and then look at all these data points, and then observe. Try to make sure you're looking at things objectively from both sides. So where we are now, if we're thinking about the state of the world, we've been hearing a lot of the R word, which is recession. And recession just means three declining points, three declining quarters in the economy. And so we're not there yet, but the trends are showing that we will be there. And often people only realize that after the fact. So what does it mean to be in three declining points? It might mean that people potentially could face layoffs. But we're also at a time where inflation is rearing its ugly head. So we could be in three declining quarters where the economy isn't doing so well, but you could be losing your job, but paying more for things. So these are all things that potentially could happen. Now, in terms of the stock market, when the economy doesn't do well and it's in lockstep with the market, it would also mean we have something called a bear market. And a bear market just means, again, we have 3 quarters where investment returns are below 20%. And right now we just hit that point where the major indices, the major markets that the stock market follows have fallen below 20%. So what do those things mean? Yes, all of those things mean that we need to keep an eye, to be on alert, to see what's happening, to observe what's happening, and translate it not into the big picture for what's happening around the world, but what does it mean for our own personal circumstances? And I think that's when it means a lot to become personal. Don't react to circumstances and make quick decisions, but look at your circumstances and say, what does that mean for me? Do I have job security? Do I have financial security? What do my investments look like? Am I diversified? So there's a lot of questions to ask yourself that before you make decisions, and even determine if you do need to make a decision about something. And I think that's the thing, is asking yourself the right questions rather than responding and reacting to a specific data point, and maybe a loss that might trigger something for you, and then deciding to make a decision based on that. I think it's asking yourself a lot of questions, contemplating the answers carefully, and then, just determining what the next best step is to take. I think those are really crucial things to do when the economy is becoming a little bit more unstable. Don't look at the big picture to say, oh, I'm going to react because the market is down, or I'm going to react because we're going into a recession. What does it mean for you?
Mm-hmm. I think I think asking questions always is super important to pull ourselves out of a reactionary mode 100%. And I think in times like this, where the idea of a recession is on the table, where people are seeing, especially, in with stocks, with investments, whatever, traditional or non-traditional, with the housing market changing the way it is, I
Yeah.
think people are feeling like it is affecting them, even if it's not immediately affecting them, if that makes sense. It feels more personal than, oh, those things out there, inflation has gone up. That might feel, quote unquote, I'm not saying it is, less personal in some ways, or, that that thing out there is changing. I don't necessarily feel, I think people are feeling like it's personal right now and it does affect them, and they don't even know
100%.
what questions to ask.
Yeah. So I think if you ask yourself around inflation, so probably most of your listeners, if not all, are feeling the pinch of inflation because goods and services
They have a
have gone
car,
up.
they certainly are these days.
Yes, yes, and there's a lot of reasons for why what's happening are happening. I mean, we had a lot of supply chain breakdown during the pandemic, and that might have led to less oil being taken out of the ground, making that more expensive, and also less production of the basics like food, and restaurants were hardly open, right? So less production, and now we're feeling the pinch of all of those things. So definitely, I think asking how does this affect me means what's happening to me on all of these different fronts. So if I'm being affected by grocery prices, um, how is that affecting my budget, or how has my budget changed? Because for so many people, the pandemic put their budget into a lockdown. So maybe they had more cash in their pocket that just maybe collected dust in their bank accounts. But now a lot of people are feeling that need to spend, right? Like they've been calling it the the spending pressure, right? Of now, my finances have been in lockdown for all these months. I want to get out there. I want to spend money. I want to be a part of this economy that's reopened. So a word of caution around that are you feeling like you have job security? Is your income keeping up with inflation? Have you done a budget that reflects what things cost now? This would be a really good time to look into that and get some questions around that answer. So that's the first one, is looking at your financial circumstances in today's dollars, right? Looking at your expenses in today's dollars, looking at your income. So putting a budget together, this would be a good time to do that. Also, as far as interest rates have gone up. Do you have a mortgage, or are you carrying other personal debt? What type of interest rate are you paying? I've been encouraging clients since during the pandemic to lock in. We've had the interest rates went even lower during the pandemic. So I was calling clients saying, lock in interest rates for your mortgage. go back, renegotiate. The rates have never been better and won't get better. So if you can get a 5-year rate at a low rate or even a 7-year rate, this would be the time to do it. And, I was able to convince some people. I wasn't able to convince others because people just assumed that they could continue to refinance their debt and use their house as a piggy bank. And now we're seeing that we can't do that indefinitely because interest rates interest rates going up have meant that the housing market has gone down. So as interest rates go up, we might see more of that. So anyway, this is the time for you to look at how much you're spending on interest, whether it's consumer interest, so credit card debt, your mortgage, and just sort of determine what is that going to look like as interest rates go up. Are you in a fixed scenario? Are you in a variable rate? What do your advisors advise around what you should do now? Because it may vary. And then in terms of in terms of interest rates on credit cards, so consumer debt, can you negotiate at a lower interest rate, or at least fix what you have as much as you can? So just shop around for the lowest rates you can find on your personal debt, just so that you can keep as much money as you can where it belongs, in your pocket.
Mm-hmm.
So those are some of the things you can do on the consumer side for sure.
Well, and I want to really oversimplify two things that you said in there, and that is, one, make a budget.
Yeah.
Because
Yeah.
listen, I will fully own I have started 100,000 budgets and I have finished 0 of them. So I will fully own that I am in this camp, but there's a lot of us who don't take the time to do it, don't know where to start, don't whatever. Make a budget with today's dollars, especially if you've had one that needs to be updated, do that, but also make one. Take the time to do it. Now is the time because of how things are changing more than ever.
Right.
And there's lots of tools for that. But secondly, have advisors available to you in some way, shape, or form, that financial advisors, whatever, wealth
Yep.
planners,
Mortgage
whatever,
advisors, lenders,
yeah, who
bankers.
actually know what they're talking about and can give you some advice and a lens and a perspective. And look, make sure you trust them. Make sure they're not just pitching one thing. That's important. No offense to those that are pitching one thing,
Yeah.
but you know, right, as a consumer, you want the perspective that their knowledge is going to give, not just, yeah, invest in this way and do this one thing one way, but find those people that can give you some of that perspective. So you're not only reacting emotionally or looking at, you know, to what you were saying with the renegotiating mortgages during the pandemic. Something that I did, I had to renew my mortgage, and I'm really glad I did it for the 5 years because I have a finally a good interest rate because it was during the pandemic, and it was at the advice of one of the people in my life who was like, go do it now. Like, here's what you're gonna need, but this is the time to do it because the rates are so good. And I probably I didn't have the awareness of how good the rates were at that point to know that that would have been the right time to do it. Right? So it is the having people around you who want to help and want the best for you. That makes a big difference.
Yeah, yeah. So it's I think building that team of trusted advisors around you, super helpful when you're not sure what questions to ask, but focusing on areas in your finances that you can personally control. So think about, what are the questions to ask? What are the things I can control in my financial life? Well, I can control how much I spend. I have some control of how much interest I'm going to pay, and I can control who I can ask information from. So if you don't have a trusted advisor in your life, or a trusted team of advisors in your life, an accountant, a broker, a mortgage broker, a banker, an advisor, find those people and ask for referrals. And then, control how much debt I have. So those are things you can control. You can also control how you're managing your investments by not panicking and making, again, emotional investment decisions, but rational decisions. Because the reality is there's always opportunities in every market that's supposed to be horrible. We hear about the opportunity after the market's gone up. That's not how investors make money, right? You don't sell what everybody's selling and then buy what everyone's buying. Where's the value if you do that? You're looking for opportunities to buy into a discounted market right now and sell when everybody's like, oh, everything's looking so great. That's when you might want to reshuffle your positions. But you can't rely on the media to give you advice about those things. Again, you need to find those trusted professionals that you can look to. But this might be a good time to have that conversation with your advisor. And then finally, around control, you also want to control how much you can save, because we always want to remember the sunny days, but we have just as many rainy days. We just don't always notice them unless it's raining for a really long time, or we hear lightning and thunder outside and we're like, oh, this might be with us for a little while. So
Mhm.
us just assume that and this is the advice I given the last time as well. Prepare for things to go wrong by looking at your circumstances from as many different angles as you can. What will make me vulnerable in this market? What will make me vulnerable in a future market? How can I expect that and financially prepare for that? Well, an emergency fund is one. So for people whose finances were in lockdown, you have a few more dollars in your coffers now than you had before. Hence why I'm saying I'm not trying to stop anybody from living their best life after being locked down for 2 years, but how much money is your life costing you right now? So get that budget done, and then figure out if all of a sudden you lost your job or had a big expense come out of somewhere, you'd have enough to cover yourself for 3 to 6 months. So have that emergency fund. See how much you have, how much of a fortress you have around you. That if you're in a situation that you don't expect, you've got money to rely on. I think that's a really crucial one. Definitely look for opportunity in the markets now, but also build yourself a fortress for something, expecting that things will go wrong. We only kind of had a break for a year, right? We had 2020, things are terrible. Now we 2021, hey, things are getting better, and now we're back. This just tells you that you never know when uncertainty is going to be around the corner. But if you expect it, then you're financially better prepared, and hopefully that'll make you sleep better at night knowing you're better prepared.
Yeah. And I think that's really important because there's no one easy answer. There's no one quick here, like save exactly this amount of money, invest exactly this and these. That doesn't exist. So it would be great if someone could, make that happen. Wonderful for all of us. But since it doesn't exist, it's about really being smart for yourself and figuring out for yourself what that looks like. People have different expenses, needs, whatever the case may be for that save. And I think I love that you mentioned, putting money aside into a savings account because I think it is so unsexy and glamorous and yet still so important to talk about having that. That's, you know,
Kicking it old school, girl. Kicking it old school. It worked in the past. It's still working.
yes. And but that's the thing is like I think that we hear so much about all the like sexy glamorous they like buy these and let's flip properties, let's invest I'm jumping all over crypto, like I'm gonna buy NFTs and I'm gonna invest this much in crypto and all these things, and it's cool, that's sexy. But if you first of all, if you're investing money you can't lose, that's a whole other conversation. But if you're doing that without having a savings as a backup in case something happens for your day-to-day life, that's not a balanced approach to planning for the unknown. That's not planning for the unknown. That is, living in a dream world where everything is perfect forever.
No, 100%. And I'm going to take it one step further, because with my
Please.
with my my retirement clients, so you're somebody, you need a short-term emergency fund to pay your bills should something happen. Just assume something bad can happen at any time. So as I said, building that fortress around your finances will mean that you have some level of protection. If you can back that up with having a line of credit, a low interest line of credit, even better, which is why do everything you possibly can to protect your credit so you can always attract low interest rates for any personal debt you have to take on, because you never know when you have to. But I take it one step further with my retirees. And because we never have control of the markets and we don't want to have to sell at the wrong time, I highly recommend that if you're a retiree, that you look at having about 2 years of your expenses saved up in a high interest account. So you're never reliant on the markets to pay your bills in a year like this. I mean, you definitely want to we are living longer and longer. So you definitely want to build a portfolio that's going to give you an opportunity to continue to grow your wealth well into retirement, because retirement could be another 40, 45 years. You just never know. Having said that, you don't necessarily want to be relying on the market to pay your bills at times like this. So that's why having that 2-year wedge to pay your expenses is a great way to start to really build that security. So I'll give you an idea. So at the end of December last year, when we were up, I was convincing my retiree clients in particular to sell some of that profit that they made and put it aside after they took out a year of that fortress, rebuilding it again. It sometimes took some wrangling, but it meant that they sold some of their profits when it was up and replenished their retirement emergency fund.
Mm-hmm. Yeah, because the last thing you want to do, to what you said, let's emphasize this, is sell when the market is down if you don't have to. And
Exactly. Go ahead.
no, no, go ahead.
No, I was going to say, because ultimately, here's the thing, right? Is um, again, the markets are going to do what they're going to do, and I think maybe the social media age has led people to become impatient with the market, because ultimately, returns where you're doubling your money, often you're not watching it in real time. Compounding happens when you're not looking at it all the time. So somebody who's going into crypto looking to be an instant millionaire, that's almost a lottery. That's not an investment strategy, right? If you don't have to do anything that sexy to grow your money. If you're investing in investments that pay dividends, that pay capital gains over time, you will on average see over 10 years your money double. Not as sexy to our younger people, but you may want to recall that someone like not Bill Gates, Warren Buffett became a billionaire in his 60s after starting investing when he was 10 or 11. That's the power of having money grow over a long period of time. So we just have to remember that these market drops do happen. Look for the opportunity, but protect yourself against short-term headaches where you're forced to sell, and try not to panic.
Yeah. I love that you brought him up because he's, one of the things that I'm not saying anything that is not well known about him, but I think it's important to mention that he talks about all the time is, investing in funds. I'm total index funds, investing in
Mhm.
index funds and keeping the money in those index funds for long-term periods, not pulling it out, not,
Yeah,
his,
because that's how you lose money.
right. And he's like, look, put a bunch of money in index funds, let the market do what it's going to do. It'll all balance out and you will make money over the long term. He's very passionate about that as an approach. And yet, again, super unsexy. This is a billionaire telling us this, and yet
Is
people are
it?
like, "Oh no, I want to move it around and do individual things and play with all
That's
this
what
stuff."
Well, the thing is, he also believes in stocks as well. There's different ways to make money. There's index funds, there's stocks, there's different types of stocks, there's funds. It just really is, the strategy is, do your research again ahead of time. Look at how that investment is going to grow. Look at also how it's going to drop. That's why we spend so much time in our industry talking about risk, because people feel the pain of losing money more than they feel the excitement of making money. And as I said, money, if you leave it alone, will silently grow and compound, and you'll benefit from that magic of compound. If you do all your research, do all your homework, see how your investments have the opportunity to grow based on historic numbers, how they've grown in the past, you're going to give yourself and your returns a fighting chance, more than if you're selling and buying and trying to, time the market. That's not how Warren Buffett's made money. He's become a billionaire because he's been investing for a really long time,
Hmm.
especially in the markets. That's where you're likely to get your best returns, is the place that you're going to probably feel the most amount of risks. So have those really deep conversations with yourself, deep conversation with your advisors about how much risk you want to take, because not everybody is suited for index funds. It just depends on their risk tolerance. But the reality is understand what you're investing in, understand the potential to make money, and then let it do its thing. I find this time of the year when the markets are down, I'm doing the most hand holding with clients, reminding them why they bought what they bought, showing them what the investment does over time so that they stay invested. This is actually why you might want to consider having an advisor in your life to help keep you on track. Because sometimes it's hard not to go, to that unhappy place where your emotions and your fears live, right?
Absolutely. And the truth is that you have a lens on the market and the way money works that is, I mean, it's your area of expertise, Jackie. This is this is one of many things, but this is one of the things that you are an expert in. So you have a lens and an ability to reflect on longer term things that when I lose $10,000 in an investment and I'm
Of course.
noting losing because it dropped, it's right, it could be temporary, but it feels like a loss even though I didn't really have that money in front of me, which is a whole other thing right there, but it's real. You have a lens on it that I, in the moment, even if I'm trying to be as rational as possible and I'm like, I know I can lose that money, it's not the end of the world, I still don't have that perspective.
No, it's hard, and you just need to find someone you click and connect with, that you have that chemistry with, that can, if you're in that situation, talk you off the ledge. So sometimes my clients will say, Jackie, I need you to talk me off the ledge right now, right? Let's go through that exercise of why we bought the things we bought. I actually love playing a game with them to say, you've only had this investment for 5 years. This investment's been around for 20 years. If you put 10,000 in there today, what's it worth now? And we do this guessing game to remind them how silently and how powerfully money can grow if it's left to do its thing.
Yeah. Yeah. Um, and again, not the sexiest thing to want to
No.
think about when it comes to money, but really important because while we might be at the precipice of a crisis in this world, right, in this way right now, I think there's some people who are screaming crisis and feel like we're at the bottom of whatever that the is going to whatever's going to hit is going to hit. They're, screaming about it. And there's other people who are 16 miles back from that precipice going, it's probably fine. It's all going to work out. Um,
Yeah, and it may well, and I think both of those things. There's nothing wrong with understanding that there may be a crisis, and looking for the most important thing you can do is look for what does it mean for your personal financial circumstances. Will it mean that you're not going to be able to be sustainable if you continue on this path? This is the time to do that deep dive and look much more closely at your finances. This isn't the time to tune out what your personal financial circumstances look like. It may be the time to not look at your investment statements if it's going to give you a whole lot of panic. But I would definitely book a conversation with your advisor if you have one. And if you're panicked about how you're investing right now, or you're panicked about your state of investments, reach out to a trusted advisor, ask for referrals. Again, find someone you click with, because in every crisis, there's always opportunity. So look for the opportunity and expect that bad things will happen by building a fortress around your finances as much as you can. So what does that building a fortress around your finances mean for you? Look at ways you can, shore up that emergency fund, reduce the amount of debt that you're currently paying on things, and really also looking at how you can organize your finances in the future so that you're in a better position should something happen.
yeah. And I think that I think it's easier, not easy, to see crises that don't involve our personal finances, to see the opportunity in crises that don't involve our personal finances or money, our money, my money specifically, right? Like
Right,
it's a lot
right.
easier to say, oh, I can see an opportunity in this crisis that does not affect me personally and my money personally. And I think when our money and our finances and our financial future is involved, it is so much harder for us to see the opportunity that might be there. And I think it's a really important reminder for people that it might not feel that way right now, and we might be super focused on the crisis because it could personally affect us, or it is personally affecting us, or whatever the circumstances are, and there will always be an opportunity in it. There's, in every recession that has happened in the past, there are people who have come out on top at the end of it.
Well,
And
Multimillionaires,
Exactly.
multimillionaires.
And not necessarily with the, I had someone say to me once, that's because they were taking advantage. No, not just because they were taking, because they invested in specific ways, because they held their ground in the market, because they, you know, put more money into the market when it was down and it was inexpensive. There is opportunity and the returns can be huge. So it's important to not make it the personal panic moment.
Yeah, don't hit the panic button. There's nothing in it for you to hit the panic button and make decisions when you're, so emotionally heightened. I know it doesn't feel good. I often have this conversation with clients. I say it doesn't feel so good. Like there's something to be said when you go to a store and buy a consumer good with zero depreciation, like depreciation is going to be 100%, and we get a deal, we get a discount. That feels good. Getting a discount in the market somehow does not feel good, but it doesn't need to feel good to make sense. Feelings are not facts, right? We really want to base our decisions on facts and not feelings. So what are the personal facts to us that we need to be considering? Really gather that trusted team of advisors that you rely on to make decisions. If you're really emotionally feeling this right now and you're in your feelings, talk to someone who can, again, talk you off a ledge, help you to make those rational decisions. Find the opportunity, protect your potential, your current personal financial situation. That would really be the key steps you can take right now. And then, try to keep your optimism higher by potentially staying off those news channels that feed us this daily dose of negative news. There's no shortage of negative news right now. And if it's going to affect your mental health, I'd probably say avoid it as much as you can and focus on the abundance you currently have in your life. That's a really important mindset.
Yeah. Amen to all of that. And if you do not have a financial advisor and you are in Canada/Ontario, the lovely Jackie Porter is someone I highly recommend reaching out to. And Jackie, your website will be in the show notes, but do you want to just say it out loud for anyone who might be listening? And
sure. It's askjackie@cartwm.com, ASKJCKIE at cart, CARTEWM.com. Feel free to reach out to us. We have a person on our team who can give you a 30-minute financial IQ if you're looking for some tips on how you can currently build your financial IQ in this current economic climate. We certainly have that service available to you. And definitely, if you can, check out our website. We've got lots of resources on there on dealing with financial pressures, dealing with the recession. There's lots of resources if you're trying to just become more, you really want to become more educated around your financial circumstances.
Yeah. Yeah. And I adore you, Jackie, but for anyone who's listening or watching, I adore Jackie for a reason. And she is truly an expert in this area. And I highly, highly recommend that you reach out to her and check out her website for those resources, if nothing else, but really it should be more than that, because she is incredible. And thank you for coming on and talking about this with me. I think it's an important conversation at this maybe crisis, not crisis time that people are unsure about. But I think it's really important to have these conversations and to remind people that this is a moment of leading through crisis that is happening, even if we don't necessarily want to acknowledge it's happening yet.
Yeah. It's the ground is definitely shifting, and sometimes things happen when you're least expecting it or not necessarily seeing it in real time. So yeah, definitely look be on the lookout for things changing, but most importantly, be on the lookout, make sure that you have a plan for how to deal with whatever change you're going to face now or in the future in terms of your finances.
Yeah, absolutely. Thank you, Jackie. It was lovely to have you on and to speak to you again.
It's always a pleasure. Anytime.
Thanks for joining me today on the Leading Through Crisis podcast. If you enjoyed this conversation, please take a minute to rate and review us on your podcast app. If you're interested in learning more about any of our guests, you can find us online at www.leadingthroughcrisis.ca.